Hello and welcome to Chapter 8 of the Accounting Insight tutorial series. In this chapter, we're going to deal with wages and salaries. So virtually all businesses employ people and pay them weekly wages or monthly salaries. And in this chapter, we'll tackle the basic accounting issues relating to this transaction. It can be confusing because of the various methods of calculating taxes, but once you get to understand the essentials that you need for your accounting entries, it is not that difficult. As background information, income tax is used to provide government benefits that are available to everyone, all citizens of the country, while national insurance contributions, what we call them NIC, are used to provide government benefits and services to citizens in unfortunate circumstances like unemployment or illness. Right, a little bit of background there. So, it is the employee's duty and liability to pay the taxes and national insurance on any income they receive from an employer. However, the government prefers to collect the taxes and NIC on the wages from the employers before the employers pay their employees. And the scheme through which this is done is called a pay-as-you-earn scheme. You could say employers are tax collectors for the government. In addition, some governments levy the business with a further NIC in respect of the wages and salaries that it pays to its employees. This NIC liability, national insurance liability, is the liability of the business, not the employee. So those are two key distinctions there. So employers need to know how to compute the tax and national insurance that arises because of the wages they pay. And in our example here, the company is going to pay its employee a gross salary of £1,000 for the period. So we do a simplified calculation to illustrate the different components in accounting for wages. So you've got the gross pay, £1,000, and we say the employee's tax and NIC, let's say it's 30%, is £300. Therefore, the net pay to go to the employee after this tax and NIC is £700. Now, the employer might be charged an extra NIC, which is the employer's liability. So it's in this case, the liability of the company limited. Let's say it's 12%, so it would be 1,000 times 12%, which would be £120. So the total tax and NIC the employer has to pay the government is the 300 on behalf of the employee and 120, which is the employer's liability. Countries have different rules, so please contact your local government agency for actual rates and computation methods, and these keep changing every year, or you can speak to your financial advisor. Now that we've calculated a simplified wages and tax figures, I'll then show you what the accounting entries would be in respect of these. So we'll do expenses, which is wages expense would be £1,000, and then on that, because the employer is employing people, the government charges the employer NIC, that would be £120. So the total expense arising because of wages is £1,120. And this, you can consider this service, the value of service that flows into the business. Then the other side, so remember we're dealing with double entry, so what you pay for, what comes in, you must pay for. The other side is the liability. scroll too fast there. The other side is the liability. So you got tax and national insurance due to the government, the £300 plus the 120, which is 420, and then the net cash to go to the employee, which is £700, i.e. 1,000 minus 300, and that would be a credit in your accounts, while the expenses would be a debit in your accounts. We'll do the journal for this in chapter 10, I believe. No, chapter 11. We'll do the journal for this in chapter 11. And that is a simplified introduction to wages, tax, and national insurance calculation. I hope to see you on the next chapter, which is going to deal with stocks of goods in the business. And thank you for listening.